Hello, and welcome to the WeighPay group. In this video, we're going to discuss freight and how automating your freight system with surcharges can be factored into your inventory costing for both sales and purchases. Why does your company need to use an integrated freight solution? Today, we hope to answer that question because we can automate the creation of hauler bills using these freight contracts. We can create these quotes. Either third party can create their own quotes, or you can create them and then they are added to a hauler account. We're going to talk about how creating scale tickets and how integrated freight at the scale can allow you to insert that into your inventory. So adding freight rates to a purchase or a sales contract is another way that we've seen people manage their freight in the WeighPay enterprise system. Some of the features: dividing the freight into the net weight of each line item on a scale ticket before inserting into inventory. This is an important fact because it makes your inventory costing real time. That means that your sales team, when looking at the cost of goods, is factoring supplier cost and freight cost when they're putting together their sales contracts. We're going to talk about in this video is what is a freight chargeback, what is a processor chargeback, and what is a milkrun freight rate. Those are all very important factors when using freight because sometimes your supplier pays for the freight or part of the freight, and our system can automate that process. Same with your processors. If you're sending loads, purchasing a load, sending it to a processor, and then on to your sales account, you can factor freight into that as well. And a milk run, a multi-supplier pickup, where a single freight charge can be factored into multiple suppliers on a single transaction into the net weight of the line items. We're also going to talk about how our system allows for the use of multiple modes of transportation. So a single transaction could go through multiple freight rates, such as truck to rail, rail to truck, rail to barge, etc. So finally, we're going to kind of finish off by talking about freight rates can be both hauler, supplier, customer, and or product specific, or any combination thereof. This means that your freight rates can be generic or very specific to the product that's being hauled for a specific customer or supplier. Let's dive into the software and have a look. Logging into WeighPay Enterprise into your account allows us to kind of take a look at how freight is stored in the system. We're also going to take a look at how freight is created as well. So let's just go into an account. Let's go into a hauler account. This could be an internal hauler or an external hauler, third party. So you have the privilege of storing freight rates for your internal transactions as well as your external when you're using third-party haulers. Let's go to freight. So for this hauler, you can see AAA hauler. We're storing multiple freight rates. Now these freight rates can be, again, supplier specific, like this one says, when we haul for this company, this is how we charge. We're using a truck. We have a roll-off container is the type. So in our system, you can have multiple freight rates by multiple types of trucks or containers. So flatbeds, pickup trucks, roll-offs, large containers, barges, side dumps, in dumps, all of those would be equipment type, and you can track freight rates for each different type of equipment. Now you're going to notice here that this one is not product specific, not product group specific, such as copper, aluminum, brass, and it's not product specific at all. So this way, neither ferrous nor non-ferrous, nor the group nor the product have been called out. So any product can utilize this freight rate. So you could make this a specific freight rate for ferrous or non-ferrous, or in this case we've left it generic. And what we're doing is saying the freight unit rate is by the mile. Minimum weight was 1 pound. So you can set your minimum weights to make sure that your haulers are picking up full loads, or if they're picking up partial loads, what the charge would be. And you can see here that we've got $3.14 per mile is our rate. We're going to ship it from or ship to addresses or tracked, so we know the exact mileage and time of that run prior to that load leaving or returning to our yard. So you can see you can set valid to and valid from dates. Let's go ahead and open up a new freight rate for this hauler, and just to take a look at some of the controls around setting freight and how we can get very specific or very generic. So first of all, we can set our freight rates, again, to be very specific to the individual product, commodity. Or you can just say, let's go by the ferrous group, the non-ferrous group, like non-ferrous. This is going to be aluminum, but it can be any aluminum under the non-ferrous category, or any brass under the brass. Or you could get very specific to the type of aluminum, the type of brass, and get into the individual commodities. So this system allows you to get very specific or leave it generic. Now in our system, you can have, this could be done by the region, by the sub-region, and you can see here you can do it nationwide. So in this system, you can set your hauling rates to be at whatever area that you want this hauling rate to cover. So this will cover every load in my Region A system. So this could be Northern California, Southern California, etc. This here is a per location. I could remove the location, making this freight rate available to any one of my locations. Therefore, it's not location specific. So again, very generic. Excuse me. You can also select the supplier, or you could leave it blank. You could select the ship to. So in this case, let's just select a supplier, and you're going to notice that under this supplier, we have multiple rates. So I'm going to choose AAA company, and then the system's going to automatically load all of the service locations for that company. So this will allow me to select if this freight is specific to a certain supplier or customer, or the ship to and the ship from address. So this allows us to use the extended rates of mileage and distance, if that's what our freight rate is going to call for. So that's in the second one under location settings. In general settings, we can set the mode of transportation, as I mentioned before. We can set out by the hour, a flat rate, by the pound, net ton, gross ton, metric ton. So you can set up any factor that you want to use that says, hey, if this load is hauling by the metric ton, then how many metric tons, and it's going to be $100 per ton, etc. So you can set your minimum weights, and you can set your rate for this. So this could be $1 per mile. This could be $1 per minute. So you can set this up however you'd like. This could be a milk run rate. We'll talk about that in a little bit. And then, of course, your valid to and your valid froms. So that's just a quick high-level view of a freight rate form and what it looks like to create a freight rate that, again, could be very specific, or it could be left to be very generic. And so it could just be, hey, company A hauls for us, and they charge us $350 a run. It's a flat rate. Or they charge by the mile, or they charge by the hour, etc. So you can set this up however you like, or you can say when this company hauls for us, but they haul for this supplier, then it's more related to the supplier or related to the ship to, ship from address. So keep that in mind, that the system has a lot of flexibility and allows you to kind of take the direction, because we're going to take a look at now at a library of freight rates and what that looks like in our system. So you can see here that there's a multiplicity of freight rates under this hauler. So this hauler can haul for, again, if there's no supplier, then they can haul for anybody. When they're using a self-dumping hauler, a self-dumping hopper, that's a different rate than when they're using a roll-off. So, and again, you can set it by the miles, set it by the flat, set it by the hours. So this way you can literally have the flexibility that you need to create freight rates for each one of your internal trucks and or third-party haulers. So that's kind of step one, is understanding how freight is created. We also have surcharges, which would be for tarping, roll-offs, wait times, and other types of additional fees that might be associated. And then we have those dead freight that if the truck arrives and there's only a partial load or there's no load whatsoever, but we charge a dead freight rate. So this kind of gives us the overall view of the freight. Let's go ahead and take a look at how we would take a look at our freight quoting system. So under the freight quoting button, this allows us to both create a estimated freight. This allows us to create a freight that would be factored into a specific account or a hauler account. So you can see here that if I add a hauler, it's then going to say, okay, which hauler do you want to use? I'm going to use this hauler. Now, when it does that, it displays for me all of the freight rates that this hauler has on their account. And I can export that if I want to look at that in a list form. It also shows me these freight rates and how they've been applied to individual tickets already. So I could drill into this ticket and we could look to see what the impacts of freight were on this ticket. But you can see this was a gross ton freight rate. This was a flat rate. So you can kind of see the different rates associated with this hauler. Now, I could create a new freight rate by selecting a supplier or customer account, selecting a service address, ship from, ship to, mode of transportation, again, the roll-off freight type. So is it going to be a by the mile or by the rate? The idea is if you get out in front of your freight agreements, then that freight can become a reality into your inventory in real time. That's the purpose of managing freight as opposed to waiting for the freight invoices to show and then you have all this accrued freight or this accrual stuff going on in your system, and your sales team then doesn't have true accuracy in real time. So again, the rate, the types of products, the minimum weights, and the rates. So this is, you can create this freight quote. Now, here's some quotes that I got, either from the hauler themselves or the hauler logged into their portal and created their own based on the parameters that we gave them. We can then apply this to this company and apply this to the company. So these are quotes that have yet to be applied. So your shipping manager would accept this if that's palatable for them. And you can see the quote. And you can say, well, I like this hauler better than I do a different hauler. So this way I can accept this one. And again, you could run through all of your haulers very quickly to see what rates you have. And you can see I don't have any rates for that hauler. But that would allow us to see that and export that into a PDF or an Excel file if we wanted to take a look at that freight quote. So in this manner, this gives us the ability to see how these are created, whether we're creating them at the account level, whether we're creating them in the freight quote system, and then pushing them to the account level. So you have some pretty good tools to manage your freight and freight factoring so that it's manufactured or invested into your inventory. So at this point, we're going to take a look at some transactions. So let's go back to current freight rates. Let's go down to a transaction, and we're going to drill into that transaction. So on this transaction, you can see ticket 6093. It has been voided. So maybe I could have chose a better one. But we're going to go down into here, and you're going to see that I've actually backed out the freight because the ticket was voided. So let me choose a better transaction. Sorry about that. Let me go to my search ticket functionality. Let me go down here to an unpaid AP. Right here, I think, has that one. Might have some freight involved. So you can see this one does not have a freight involved on this transaction. So you can see that we have, just for an example, we have a ticket. And line item 1 is on this contract, line item 2 is on that contract. We'll follow up with a contract video after this showing you how our system combined any unit of measure with multiple contracts on each line item. You can also have, you'll notice that this was a milk run because I have company A, AAA company, and ABC Recycling on the same ticket. But I did not factor a milk freight run on this one. So let's go ahead and go back to our system and find that transaction that we're looking for. So let me go find another one here. I know I did one earlier. Sorry for the miscue here. I think this one might be it. Okay, so you're going to notice this line up here that says ticket cannot be edited. You can't create an adjustment ticket while freight rates are active. The reason is the freight rate could be tied to a weight on the line item, in which case you would need to undo the freight rate, go in and do your edit, and then refactor the freight. And that's what the system is telling us, because we can both clone this, make adjustments, etc. So we can see the hauler was AAA hauler, and it was a truck. We can see that it was a 20-yard roll-off. We can see that it was done truck $456 at 35 cents a mile, was a total of $159 in total freight for this. And so This allows us to see if there are any surcharges. And you can see there was a non-inventory item, which was probably a tarping fee or something like that was put into here. So this allows us to kind of come in and look at our fees and our charges and how they're tied to this ticket. Now, if I open up this line item, you can see that $60.97 was applied to line item number 1, whereas line item number 2 had $198.84 tied into the freight. So it subdivides the freight rate into each line item on the ticket, thereby inserting it into your inventory. Let's go ahead and take a look at our inventory system and how freight is layered in to make sure that you understand the before and after effects of freight. So in our inventory system, just at the highest level, we're looking at the group of aluminum. In the group of aluminum, you can see here that I just broke this apart. Actually, let me bring it back down a little bit so we can see the rest of our aluminum. So we have a total of 110,000 pounds, and we so far have a total of 8,076 in total freight. Of that total freight, 4,800 had been charged back to the supplier. So then our total freight is $3,219 in our aluminum category. Now you can see how it's broken up into aluminum clean, aluminum dirty. Different transactions have had different freight involved depending on the freight contracts that were used. So you can kind of see this. In the processor freight, we have it factored in, and then it runs all the way down to our average cost. So this is what's important. Now we can drill much deeper into our freight costing and our average costing when we look at our inventory positioning and how we came to this $1.59. So that's my average in the group of aluminum. Again, if I go down here, you can see that this product, aluminum lead, has only an average of 31 cents. And so it tells us the total value that we own and the total average price. So this is how we're factoring freight into your inventory in real time. So you can always see your available units, freight in, freight charged back to your supplier. In other words, taken away from the supplier, the amount you owe your supplier, and then the total freight itself. So that's just at the one level we're able to see that. You're going to notice that in our inventory system, we deal with tagged inventory. This would be your finished goods. We have freight that can be allocated into your tagged inventory as well. You can see pallet box, gaylords, etc., the different types of finished goods that are ready for sale. We can then go look at our on-hand inventory. So on-hand could be ferrous, non-ferrous, or other, and you could drill into any of this and then expand it to take a look at the types of inventory. It's a multi-status, so you can see prepared versus unprepared in our inventory system. You can see total net, total freight chargeback, right into our on-hand inventory system. You can also go into your in-transit. In-transit is going to show us our sales. This is what's left our facility, and it's in transit right now. We don't have the received weights, nor have we been paid for it. So systems can be set to relieve the in-transit when it arrives or when you get your settlement report. So both ferrous, both non-ferrous. And then we get into our sold inventory, and you can see here that we have a sold inventory as well. So that's just kind of quickly how inventory can be displayed. And then if we go back to our inventory and we go to our inventory positioning, this is where we can really drill into the details, and we can say, okay, in the aluminum group, now I can change my date range that I'm under. I'm only under a month. So let's go back and grab another month just so that we make sure we have some transaction sets. You're going to notice in this transaction set, I've only got 3 purchases. In my aluminum, now you're going to notice I've got some other ones. So I'm just going to select the group, and we're going to take a look at the group. We have 123 transactions in the date range that we've selected for aluminum as a group. So you can see here, this is what we started with. This is what came in. This is what was regraded. This is what went through a production movement. This is what was transferred from another location. This was an adjustment that we did during this date range. And then we have our sales, and then we have our ending values at the end. So if I go into here, you can see the transaction set. I have 16 transaction sets under purchases. So you can see again the differences, and you can see we've called out here's a freight cost, here's an inventory cost, there's a freight cost, an inventory cost, etc. So we call out these in the system so that we're able to see what the costs are going into, and this is the quantity. So you can see that the freight cost in here was 366, and this was the average before, this was the average after freight impact. So the inventory positioning lets us go deeper into by the group and or by the product itself, and then I can go into the historical details of how did this impact my database. So you can look at 11:10, 11:10, 6:38 p.m. on the 2nd, and then so you can see how historically your inventory was made up and how your costing has arrived into your system. And so again, this is giving us far greater detail than just the inventory page, but how did our inventory costing and how did our freight costing come about? So once again, we can go into just a specific commodity like 6061 aluminum extrusion clean. You can look at how much inventory was purchased, what did we start with, what did we finish with, and then what are the purchases, the regrades, etc. You can see on the screen. So once again, I can drill into the individual transactions, and we can start to see inventory cost or if there was any freight cost allocated into this, and you can see the historical impacts of that to your data. So that gives you kind of an overall view of how inventory and freight are connected and how we're creating freight bills. Let's take a quick look though at a freight bill so that we can understand how we're doing this. So you can see here that we designate H is a hauler bill, S is the supplier bill, there's a hauler bill, there's the supplier bill, supplier, supplier. C is for customer, that is for a sale. So we can go over here and we can look at the details of this, and this will show us the freight cost was standard freight. There was no surcharges involved in this one. And so again, if there were surcharges used, you can go down here and let me see if I have any surcharges involved in the freight rate. That was just the material cost. I was looking at a bill here from a company, not a hauler. And so I could obviously filter out and just look for this company and show me freight rates for that company there. And so you can see we have two bills for that company that we can take a look at. So this here is showing us the details of that and the freight costs that are impacted and the bills. Now we could pay these right now. Simply select that. It shows you that we owe this hauler $5,066. We can then make a payment to that hauler. So if I click on how to make a payment, you can see here that I can then hit, so you can see these are the bills that we're netting. Those are the two. Then we're going to go to payment, and then we're going to select a payment. This might be done in your invoice system, such as NetSuite Oracle, but we can choose how we're going to pay. Their default was ACH, but I can check that and say, you know what, we're going to pay them by check this time. And so when the system loads, I can put in the check number. You can see here that we're going to pay them a total, and I'm going to hit the update button, and this would then print your check for you. So now we have just made that payment to that hauler, so it's a full billing system, and the billing system, of course, has your hauler bills as well as your supplier bills and your customer invoices. That, of course, then can be tracked to your ERP accordingly. So in this video so far, as a recap, we've talked about how freight can be set at the account level. We've talked about how freight can be put on freight quoting. In other videos, we talk about how using freight and contracts, you can tie them together on a work order. You can then dispatch and schedule those. So that's one other way. And the other one is freight on contracts. And so if I select the contract, we can go into one. Let me go to one that I just recently set that I can remember. So we're going to go to 110. We're going to select that contract, and we're going to open it up and take a look at it. On this contract, you can see here all the different parameters that we've set as far as the payment terms, the billing address, ship to addresses. All of that are on what we call the contract header. And then you have the contract items, which is tin light iron. So you can see the price is $220. Any attached documents, any images that might be associated, any advances given. We can see a complete audit trail for this. We can see there's been one editor, which is me. I've edited this contract 6 times. So you can see that this contract has generated 37 bills already. And so you can see that this has been used on the different haulers and suppliers. AAA hauler is on this contract. Freight rate just as listed below, the same way that you can store freight rates, you can store them on contracts, and then you can look at your fulfillments that have come in, and so you can see here the different fulfillments and the different tickets that the fulfillments were on. So that'll kind of give you a good idea how freight can be stored at the contract level, freight can be stored at the account level, freight can be quoted and then applied to the account so that it can be used on a ticket. Let's go into a ticket real quick and take a look at how freight would be factored on a ticket. Okay, we've opened up our scale application and we started with that contract 1010. So you're going to notice this is on that same contract 1010 that we were looking at earlier for the tin and light iron. You're going to see that we have a ship from address that we're able to select. If for some reason that came from a different ship run address, you'll have the ability to change that to one of the others if for some reason it came from a different location than was on the contract. So you have full control over that. Full control over the container type that this is coming. This is coming on a 20-foot roll-off. So that gives us kind of that ability to see. You're going to notice that I have live camera capabilities and we've taken a photo already. But at this point, if this was the single line item that was coming in, we didn't need any deductions or any grading. We just want to factor our freight. We would hit print finish, send to accounts payable. Now I could also print if I need to hand the truck driver his receipt of drop off if it was a third party hauler. And at this point, we're going to calculate the freight. What this is doing, if there was one freight rate, it would have simply went through the system. It is normal to have one freight rate per contract or per ticket. However, in my test database, I present multiple different freight rates, flat, time, distance, and another flat one. So this would allow us to apply this freight. So if I said, okay, let's just use this one. Now, again, sometimes your scale won't know that, and so this may be reserved for an adjustment ticket later, where your scale operator would skip this. But for this demo, I just wanted to show you that we're going to apply by time $175. And then it's going to show us if we have a tarping fee. I'm going to click yes. So you can have multiple surcharges at this time, tipping fees or other things that might be involved. And then I'm simply going to save this ticket and go back. So it's ticket 6800. And that ticket is then being saved. And we'll take a look at it in the back of this. Okay, back in our web application, we're able to see that ticket 6800. We can then open up this transaction. And we can take a look at it. Now in this transaction, you're going to notice freight, of course, is active. So in this ticket, you can see that we don't need to create an adjustment. If we had a freight invoice come in and the invoice was different than the freight rate that we're presenting, which was $100 on the surcharge and $175. So if you had a $275 invoice, no changes need to be made. However, if there was a different one, you could hit the adjust button and make your changes accordingly based on what changed from your freight hauler. So this allows us to go to the ticket items. This allows us to drill into the ticket items and see that we have a $275 charge and a $275 charge back. That means that we split the freight rate with the company. So we took the freight charge back was 100% of the freight on this case, and that would be under the AAA company has a chargeback. Let's take a look at the account level, how you can make those charge settings. We're going to go back to an account. We're going to go into the AAA company. So it's loading all of the transactions and tickets for my primary database where I've run obviously about 6,800 tickets. But if we go into here, you're going to see that on the AAA account, you're able to see all the balances and all the activity that's going on in this account. And what we want to take a look at is the settings and how we can set freight chargeback is set right now to 100%. So you can see here the chargeback, standard chargeback, can either be by the amount or by the percentage. Now I set mine to be 100%, so that means any freight that comes through, the supplier is paying that freight. I could set it to percent, 50%, in which case I'll only take half of the freight and apply it back to the supplier. The company would be picking up the second half. So you can see how we have milkrun, processor, and standard chargeback rates built right into the system. So this is where we would set the sales category, payment preferences, in any of the region that this account is in our system, and what price board, what base price board system they're on, in which case we can see the price board here. And the system also allows us to have contracts, spot pricing, formula pricing, baseboard pricing, and then you have both tier pricing and provisional pricing as well. So in this account, we can of course see all their bills. We can see any payments that were made during this date range. We can go and take a look at any freights that are tied to this account. So AAA does have its own freight, and so that could be factored into the hauler that they're using or that you've assigned or agreed to use to haul that in. We can see how many assets are at their locations right now under this account. These are the assets that we've assigned to that. These are the work orders that we're dealing with right now. So you can see this one is in progress. And so you can see this one is yet to be accepted. And you can see whether it's an internal hauling or whether it's just dock-based, meaning they're going to just deliver to you, or whether a third-party hauler is being used to haul this load. So you can see this was a brokerage load. This is a drop set of a new container that's heading out to this location. So you can see the amount and the ticket status on these assets as well. And so quite a bit of power between the asset management and the work order for this single location. So whether you're a salesperson or whether you're a yard manager, you can manage this account from front to end on all their transactions and all their payments and all their bills. Transaction set is right below us, so I can see all their tickets and I can drill in and see everything that I need to see and or reprint anything that I need to reprint. So that's how simple it is. And then of course we'll drop off to our dashboard and drop off this video. And remember, WeighPay. So advanced, it's simple.